So the GDP data for the fourth quarter of FY21 is out, and it is at 1.6% growth compared to the same quarter last year. For all of this financial year, that is FY21, India's economy contracted by 7.3%, and the growth of the economy from 2019 to 2020 was 4%. So what does all of this mean? Well, let's start with the Q4 number of 1.6%. This means that India's economy was actually beginning to recover pretty decently from the fourth quarter of the last financial year, that is January, February and March, before the second wave hit. Remember, the second wave started hitting in a big way mid-March, and that may have crept into the calculations of the fourth quarter, but largely there was a recovery in the economy before the second wave hit. The overall number for FY21 for minus 7.3 is also telling you that the economy was recovering better than expected. The number was expected to be much larger. The contraction overall was expected to be much larger for India. The last official estimate was minus 8%. So at minus 7.3, we've done better. But what happens next? So the experts that I have spoken to have some interesting points, and let me just break those points down for you. They expect that in quarter one of FY22, that is the April to June quarter, we may see a growth of 10 to 12%. Now you might think that that's great if we see a growth of 10 to 12%. Not really, because it's comparative to the same quarter last year, which was quarter one FY21, in which we saw a contraction of minus 24% as a result of the lockdown after the first time that COVID-19 hit. So when we see a 10 to 12% growth, that's really not great. That says that we're still lagging behind the contraction that we had in the first quarter. So that's the overall impact that we may see of the second wave taking place. Another point that experts are talking about is what is going to be the impact in rural India. Now remember, in the last financial year, the resilience of rural India is what kept us going. Rural demand was good, agricultural sector was doing well, some demand was coming in from there. But this time round, there are reports that, you're seeing COVID-19 spread into rural districts as well. So on that, Mr. M. Govinda Rao, who's a former member of the PMEAC, says that at least this time round, this April to June period is a pretty slow period for the agricultural sector as it is. So hopefully there won't be too much of a hit. It's a lean period for them. D.K. Joshi, the chief economist of CRISIL, on the other hand, believes that we will not really be out of the woods until we vaccinate enough of the population. Vaccination is key. Otherwise, we'll always be looking over our shoulder thinking, when is the third wave coming and when is that going to impact us? He also points out that these GDP numbers do not still reflect the kind of hit we've seen in the informal economy, and that's a really big question. What about the informal economy, people who are not in the grid per se, your informal workers, your migrant workers? What happens to them and how badly have they been hit? He also talks about how consumption is likely to be hit this time because of uncertainty, because of a loss of incomes, a loss of jobs. Consumption will be hit, and it accounts for 55% of the GDP. That is the big problem over here, and he believes that there is now a legitimate need for income support from the government to support consumption going forward. It is only by the time we do that, by the second half of this financial year, that we can hope for the economy to recover. It's dependent on the kind of support the government comes in with, and of course the pace of vaccinations. That right now is the biggest question we have.